This is the calculator we're going to use to explain CGT transactions. Of course, if you have a certificate from a trust or an investment fund showing the base costs, proceeds, selling price and the gain or loss, then you certainly don't need a fancy calculator, as all the amounts you need are on the certificate for you, ready to enter onto the ITR 12. You can simply enter and itemize the amounts on these certificates right here and show the base costs, proceeds and gain amounts straight from the certificates. I'll click on the Itemize button to open the grid. These itemized grids will take as many entries as you wish. There's no limit. And when you click on the OK button at the bottom, it'll add up all the gain or loss amounts and enter them into the program for you. And there you can see the 150,000 Rand total gain from the share transactions. However, you'll probably need help working out the gain amounts on other types of assets, because it can get quite involved, and for that we need the CGT calculator a little bit lower down on the screen, where we can add as many different capital gains transactions as we wish for a taxpayer. Different exclusions and exemptions apply to the disposal of different types of assets. So the nice thing about this calculator is that we can simply select different types of assets by clicking on these buttons, and all the appropriate laws will be applied. You can see that we have selected this particular asset as an other asset, as it is a second property as opposed to a primary residence or small business sale. Looking at this first very simple example, we can see that we bought this holiday house for 1 million Rand and sold it for 6 million Rand. So we made a profit of 5 million Rand. The profit that SARS wants you to enter on the ITR 12 as code 4250 is the 5 million Rand profit. SARS will apply any community of property splits, annual exclusions and inclusion rates. If we click on the summary button at the bottom of the screen, the calculator has also subtracted the taxpayer's annual exclusion of 40,000 Rand and worked out 40% of the balance of 4,960,000 as being 1,984,000, and that will be added to the normal taxable income in the assessment calculation. Note that changes to SARS's definition of remuneration means that this amount added to taxable income now affects the formulas for calculating the deduction allowed for retirement fund contributions. Closing the summary screen, we can see that the property was bought after CGT came along in 2001. So working out what SARS calls the base cost and the profit is very simple. The base cost is the purchase price and the proceeds are the sale price. The proceeds less the base cost less certain other costs is the profit or gain. You may claim acquisition costs such as registration costs, legal fees to prove ownership of the asset, etc. Improvement costs you may claim do not include maintenance expenses. If you fix the garage roof, then that is maintenance and you cannot claim it. If you built an additional garage, then that is an improvement and you can claim that.